Hi there, Serial Trader here. Let's check in with the major US indices. And okay, so as of Friday's close, we had further strength. And just on a short-term wave count here for the S&P, it still looks like this, smaller degree fifth wave. I mean, it could end at any point here. But once it does, expecting some sort of requisite corrected pullback and then possibly further rally after that. So near term, it could just continue edging a little higher, but the next move of significance, at this point, likely to be a bit of a pullback before we can kind of build a base for the next stronger wave up. So that's what I'm seeing there on a real short-term picture. Okay, we're looking at the candlestick chart now, and let me just go to the S&P. All right, so here's that resistance level, all the way back from, what's the date here? March 13th, okay? And this was actually the B wave extreme of this triangle wave 4, which we completed down here. And that came in at 2801.90. So on Friday, we actually broke that. We went as high as 2804.53. And on a closing basis, we closed at 2801.31, but we still closed above the close of that day, which in March there, the close was 2765.31. So on both an intraday and closing basis, we've taken out that significant resistance level. And I mean, despite being in the overbought condition on the oscillator, once you start breaking out, overbought is a less meaningful indicator. But we're above the 3T line, we're above the T line, we're above all these different moving averages, the 20-day, the 50-day, obviously the 200-day. So you got to give the upside the benefit of the doubt here. Short-term pullbacks aside, I still expect this larger trend to go higher still. Now, what will kind of be ideal to see is, go up a little more, and then start coming down, and then maybe find support in this 2800 area where it was formerly resistance. If that became support and we made a little base there and then started coming back up, also maybe coming back to the T line, coinciding with that, that'd be a nice setup for more of a swing trade, a little bit longer term to the upside. For now though, I'm still going to play it on a day-to-day basis, just because short term we are overbought. And, we could have some sort of little pullback at any point here. So I don't want to be chasing here on real short-term, high-leverage stuff. And to take a bigger position with a little bit longer time frame in mind, you'd want to see some sort of corrective pullback at this point. Buy and breakout certainly can work, but, when you buy a breakout, where do you put your stop? Usually you have to put your stop pretty low, and that involves a lot of risk, especially on a big position if there's leverage involved as well. So that's kind of my take on that. But, intraday, go to a 10-minute chart. If you have a little corrective pattern like this, like if we go in closer, say you have something like this little sideways pattern, forms a base, and then we start coming back up, start breaking out again, that can offer a decent intraday setup where you buy, a break of this overhead resistance, put your stop here just at the consolidation low of this little pattern. And then ride a decent wave up if there is one, but if not, you've got a pretty tight stop. At this point, your stop would only be a few S&P points, which is quite reasonable. Okay, so move on to the Dow Jones Industrial Average, and that Dow Jones still looks quite bullish, although it hasn't broken above its equivalent resistance levels, so perhaps it will just continue being a laggard. But I suspect if the S&P can really get going, the Dow will follow suit. Anytime here though, we could have a pullback to the T line, which would be quite healthy. So watch for that. I wouldn't be chasing the Dow here, despite its uptrend strength. And okay, the NASDAQ composite. So I just want to point out a little pattern on the NASDAQ composite. So on the daily, obviously we're at all-time highs, intraday and closing as of Friday there, okay? And we're quite overbought here, but again, overbought not as significant when you're on a breakout. It's certainly a breakout. There is no resistance when you're literally making a new high, every day at this point in the current condition. But when you're in the overbought condition and you have a mature looking, potential 5-wave sequence to the upside out of the wave 4 triangle, that's a fairly terminal move, okay? And now we have a doji star. This is an idealized doji star. Look at that. Basically a non-existent real body, a nice upper and lower shadow. Quite equal in length too, the upper and lower shadow. So a doji star in a very, extended looking upside trend in the overbought condition on the oscillator. This is just a little warning. It's not saying, hey, short me here or sell now. What it is saying is if you're long, tighten your stops up. And if you're looking to get long, be cautious, because a doji can be just a pause in the trend, and then you can resume going up, or a doji can be a reversal, and then begin, at least a little short-term downtrend. So see how it opens and see how it closes on Monday. If you open and close higher than this doji, then this is likely just a pause, and then the uptrend will continue. And I think I pointed out in a previous video this Elliott final channel I've drawn, where you connect wave 2 and wave 4 off the extreme wave 3 in parallel. If we're going up in this 5th wave here, oftentimes you get to the top of the channel before you kind of hit resistance, or sometimes even do a throw over, it's called. And you go actually a little bit above the channel and then come back down in a correction. So just be cautious with this doji in place. And okay, look at the volatility index. And VIX is right near its lows that it's been in for this range. Is quite near the low of the range. So certainly nothing to worry about on the VIX side of things if you're long or looking to be long. Actually, it may not be a terrible time to establish a small long volatility position, because likely once you get to the volatility is kind of a range bound thing. So if you're at the lower end of the VIX range, you'll likely have a move back up to the upper end of its range, and you can just trade the range of VIX sometimes with some success. It's not necessarily what my style is, but there's certainly people that do it with success. So VIX calls, if you were to, let's go look at the VIX options chain here, and maybe something around 30 days out, so the August VIX options here. And usually, so the implied volatility, on volatility in this case, is usually quite high. You see the percentiles here. So what you'd want to do is something in the money to really reduce how much you're paying for the extrinsic value of the option. So maybe these 10 strike calls expiring on the 15th of August. If you want to have a small long volatility position, you could buy any number of these calls. And right now they're trading at in the $4 range. Okay, bid 410, ask 450, so somewhere in the low to mid 4s. And okay, so if VIX is at 12 right now, and this is the 10 strike, roughly half of this option is intrinsic value. So you're only paying about 50% for the time premium on this. Quite reasonable. And okay, so if VIX even just went up to the upper end of its range here, say 18, or just be conservative, yeah, around 18. So if it went up $4, now all of a sudden it'll be $8 in the money, and assuming zero extrinsic value whatsoever, just pure intrinsic, this $4 and something call would be worth more like $8, so roughly a double, and that would just be a modest move back up to the upper end of the range in the next 30 days. Certainly not an unreasonable thing to happen. And that would likely coincide with some sort of short-term pullback in the S&P. Anyway, just a thought. Might be something I explore. Not a huge position or anything, but just a little kind of side bet, if you will. Quite reasonable. All right, well, that's probably good for the VIX, sir. And just looking at the overnight futures, I'll bring those up here. Looks like nothing dramatic has happened over the weekend as of yet, as far as the S&P futures action goes. and we're roughly unchanged. We're up, you know, a couple points on the futures from Friday, so really nothing dramatic there. So hopefully you have a good week trading, and we'll certainly be checking in as the week progresses. All right, Serial Trader signing off.